Welcome back. In a sea of red in the markets, we are seeing some bullish signals, and Coinbase continues to dominate not only the DeFi market, but also crypto gaming in general. We got a lot to talk about in today's video. We're going to be talking about the dips. We're going to be talking about buying the dips, buying low, selling high, and also kind of dig a little bit deeper into some of the top cryptocurrencies, Ethereum. We're going to talk about Avagachi. We're going to talk about Solana. We're going to talk about Coinbase. We have a lot to discuss in today's video. And I really wanted to kind of put into perspective where we are in the markets and all of the signals that we're seeing that still show kind of, listen, guys, we just came out of a bear market since effectively the FTX collapse was the bottom of the market. And during the last few years, we have heard announcements and announcements of announcements, but not really that much. And I've been wondering, when are these blockchains, when are these ecosystems going to start releasing, hey, we're doing this, hey, we're doing that, hey, this is what we're going to be doing, hey, this is where we're releasing, we have new products that are going to do this. We haven't really seen a lot of that, but now we're starting to see it. And why? Do I think the timing is off? No. We have just basically hit the 1 year since the Bitcoin halving of 2024. And based on historical data that we have covered on this channel before, from the 12-month period to the 18-month period after the Bitcoin halving is typically when we have seen the most explosive growth to the upside in the markets. And so while we have seen a corrective phase in the crypto markets and in the stock markets as well, I mean, you guys can see on the 1 year chart of the S&P 500, which is one of the basically a stock market index of the top 500 companies in the US. On the 1 year chart, we have literally just in April, just in the first week in April, we have wiped out all of the gains for the last 1 year. All the gains. Anybody who was in the positive over the last year is now back to where they started 1 year ago. That is not great. And that's in the regular stock market. Obviously, crypto is in a little bit of a different situation, but not for all the cryptos. Ethereum still hasn't hit its all-time record high, still is getting a FUD campaign pushed against it. But meanwhile, if you forget about the emotions and you forget about the FUD, forget about the chartists and analysts that say that, Ethereum will never recover. We all know this is BS. Let's understand a little bit more. And by the way, don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video right here on the Cryptoviser podcast. We upload almost every single day to bring you the latest happening in the financial world. So let's get into it. Ethereum dips into capitulation zone and analysts reveal what could come next. Now, you guys know capitulation zone is basically the bottom of the market or the top of the market, right? It really depends. It just kind of indicates where people have capitulated, right? Where the downside has been so over, maybe we've gone more to the downside than the fundamentals call for, right? Ethereum has begun to show signs of recovery following a sharp decline. Ethereum remains under broader market pressure despite the rebound, but analysts assess its short-term and long-term positioning. One of the focal points of the current market analysis centers around Ethereum's realized price metric. This on-chain indicator calculates the network's market value based on the last price of each Ethereum coin that's moved, providing insight into the average acquisition cost across the blockchain. When Ethereum trades below the realized price, it often reflects a bearish sentiment and increased selling pressure as holders find themselves underwater. But according to on-chain analysts and crypto quant, Ethereum's recent dip has taken it below the realized price. This development carries important market implications. The analyst stated, quote, each Ethereum is evaluated based on the price it was last transferred at. When you average out all those prices, you get the realized price. This gives us a much more realistic sense of what the average investor paid for their Ethereum, and it often paints a very different picture from the current market price. So that's a very interesting concept, right? So if you move the Ethereum at $500 and now you're moving it again and we are at $1,400, it's a $1,000 approximately a realized price gain on that. So that kind of gives you a little bit of an understanding as to whether the person made money or didn't, right? This analyst outlined three core takeaways. First, a drop below the realized price tends to coincide with an increase in loss-driven selling as investors react to being in the red, right? Reevaluating your positions, stop losses being hit. So when you're in the red, typically there is extra selling or excessive selling because you don't want to keep going further down, or you're realizing just the tax loss harvest or whatever the reason is. Second, such events are often associated with the capitulation phase where the confidence erodes and widespread selling occurs. Lastly, historical data shows that Ethereum falling below this metric, the realized price, has often aligned with market bottoms and preceded subsequent long-term recoveries. The analyst said, basically the same thing. So, yeah, I mean, I would kind of agree with everything that they've said here. Everything from a market sentiment standpoint does indicate Ethereum is close or at the bottom. There has been so much FUD about Ethereum. There's been so much negative sentiment toward Ethereum. And meanwhile, it continues to be the number one DeFi ecosystem on the planet, the number one used smart contract platform, the most interoperable ecosystem. And by the way, this is not even one of my largest holdings in my portfolio, but I do believe that it is highly undervalued, especially when you compare it to the other cryptos in this cycle, namely Solana. But yeah, I mean, we have to think about where the price is, what the fundamentals look like, because as I've explained since the whole meme coin fiasco just a few months ago, everything will come back to the fundamentals. And when that happens, I believe we're going to see Ethereum's price recover fairly substantially. And in my view, this is a bull flag for Ethereum, major bull flag. Can we still go further down? Absolutely. But when we look at the realized price, and a lot of people have been buying over the last 2 years effectively are in the red. I mean, even on the 1 year chart, anybody who's purchased in the last 1 year is in the red. There's going to be one person in the comments say, but Cryptoviser, you're not telling the truth. I bought this year and I'm not in the red. I'm like, that's virtually impossible based on this chart. It's virtually impossible. I mean, if we pull it back a little bit further, the last time we were at $1,400 was maybe 2023, and I'm not even seeing that. 2023, it looks like $1,500. So we're below 2023. So keep pulling it back. Last time we were at $1,400, yeah, it was in March of 2023. So quite a long time ago. Everybody who's bought since then is in the red. It's absolutely insane. Meanwhile, Solana continued to be the best performing crypto in this cycle, and all they had was meme coins. That's all they had, just meme coins. So now we're down, more than 60% from the all-time record high of $260, and probably going lower. I think below $75 easily. But where did all that value go? It didn't just disappear. It's going into other assets. And I do think Ethereum is going to benefit from that. Anyway, moving right along. Kathy Woods, ARK Invest adds $4.8 million worth of Coinbase shares ahead of the new tariffs. Now, we know that ARK Invest and Kathy Wood are big Coinbase fans, but it's very interesting to watch how they trade this market, because even while most people are not making money, they are. They are. So ARK Invest purchased an additional $4.8 million worth of Coinbase shares across 3 ETFs. ARK Invest bought 31,730 Coinbase shares across those ETFs. And that's a lot of money. Let's see how Coinbase is doing here, and also look at what they're doing from a price perspective. Let's pull up the 1-year chart. Coinbase also, similar to Ethereum, right? The low of the year was $147 in September, and we are basically at that low. So basically, anybody who's bought in the last year, Coinbase stock is in the red. And so when we think about Coinbase's business and their business model and what they're doing and basically their recent earnings reports, I mean, it's pretty good. Their most recent earnings at the end of last year, they had $2.2 billion in 3 months. And they made basically $1 billion 1.3 billion off of that. They basically half of their revenue was profit. That's big, guys. That's really big. And it's being valued right now at $40 billion, right? They do own crypto. They're the largest crypto exchange. I think it's highly, highly undervalued. And so it's very interesting to see that the bigwigs, right? Bull flag, just to the title of this video, right? Markets are flashing bottom. Markets are flashing up. Even if it's not going to be prolonged, even if it's just going to be a little bit of a pump, that's what's happening. And meanwhile, Coinbase and Uniswap joined the SEC for their first crypto trading roundtable. This is different than previous roundtables that they've had with crypto industry, but the Security and Exchange Commission on April 11th will host the crypto industry leader and TradFi experts to restart and reshape digital asset legislation. The event is titled Between a Block and a Hard Place, and it's the first of a 4-part series announced earlier in the year. These talks were designed to establish clear frameworks for crypto companies that have long operated in regulatory uncertainty. As I've explained in previous videos and probably earlier in this video, the uncertainty is what the markets do not like. Because remember, the markets are forward thinking, so they're always pricing things in, right? If they think that the tariffs are going to be positive for the U.S., well, the market's going to price that in, and prices are going to go higher. Right now, there's a lot of uncertainty around tariffs. That's why the markets have dropped. But once we have clarity, and we're already getting clarity, Coinbase is, I think about all the things Coinbase wanted to release and wanted to launch over the last few years, and they have not been able to. Think about all the things they had to stop offering their customers. There were a few products that they stopped offering their customers because the SEC told them to. I just think that we are on the cusp of like this crypto boom from an infrastructure standpoint, an integration standpoint, and hopefully a price standpoint as well. Anyway, moving right along and showing you more of this kind of reshuffling of the deck, right? A reshuffling of the crypto ecosystem. DeFi game Aavegotchi is going to abandon Polygon and migrate to Coinbase's base. Now, you guys know I'm a big Polygon bull. I do think Polygon it's a premier layer 2 on Ethereum. When Ethereum goes higher, I believe we're going to see Polygon do extremely well also. I hope so. I don't see why it wouldn't. Okay, I don't see how it couldn't. Polygon is now number 42 crypto. I mean, look at this valuation, $1.7 billion. It's the premier layer 2. It does more than Aave, more than Ethereum Classic, more than the Crow token, more than Mantle, more than Aptos, more than PPCoin, more than Pi Network. I mean, it does so much more than all of these other ecosystems. And meanwhile, it has no valuation. Again, I do think this is part of the Ethereum capitulation story. And it's a bull flag. You know, some people would look at this and say, well, Aavegotchi is leaving Polygon. They're going to go to Coinbase. Well, a lot of these ecosystems are going to Coinbase because I believe that the development of Base is going to, it's going to happen quicker because it's centralized and it's not really a decentralized development ecosystem, right? It's being supported by the bigwigs. So I guess it would be less maintenance on the network, but let's understand a little bit more. Let's see if they give us a reason why they're switching. It says the DAO running Aavegotchi, which is a niche NFT game, which by the way, nobody uses, voted overwhelmingly to migrate the entire system to Base, a move reflecting a shifting developer and user sentiment in the broader Ethereum layer 2 ecosystem. Again, more FUD about Ethereum and Ethereum layer 2s. Just because we're having NFT platforms moving, maybe they're moving because they're not making money. And they're saying they can't afford to be on Polygon, but it's really they're just not making money because nobody gives a F about NFT games. Anyway, by the way, I'm not a hater on Aavegotchi. I don't really get this niche. All Aavegotchi NFTs, wearables, game assets, and smart contracts will be cloned and relaunched on Base according to the proposal, with legacy assets on Polygon set to remain viewable but frozen to prevent transfers or updates. Then they talk about Polygon usage. According to data from DeFi Llama, TVL on the chain has dropped from a nearly $10 billion peak in 2021 to just $737 million today. In early 2024, TVL stood at $892 million. All right, so fair enough. Let's look at this. Avagachi, by the way, $580,000. So honestly, nobody gives a F. But let's look at Polygon Chain and understand a little bit more about the TVL, because these are important metrics. Don't get it twisted, guys. So Polygon right here, they go by, I don't know what metric they're rating this under. Oh, DeFi TVL, $714 million. Sonic, which nobody even knows what the F it is. Barachain, nobody knows what the F that is either. These have higher TVL than Polygon, but never even heard of these. Never even heard of these. But it's still a top 20 crypto when we're talking about TVL. You also have to understand that Polygon, the price was much, much higher in 2021 than it is today. So comparing those numbers, I don't think is appropriate, because I really want to understand how much Polygon is locked, because this is going to tell us how much usage is actually on Polygon. So when I go to the chains and I click on Polygon, and then I don't want to see the US dollar amount, because this is telling me based on the valuation of Polygon. I want to know how many Polygon coins are actually locked in DeFi. And what you can see here is that from November, right, the Trump pump, all the way to the beginning of 2025, we had a massive drop in Polygon TVL. I think some of this has to do with selling, right? Because again, during the Trump pump, we did see a lot of selling because the prices were going much higher. And I don't know, this may be a new metric to look at. When TVL drops like this, maybe that means the price is going to drop as well because there's selling going on. Or it can keep going up into the selling. But either way, we saw a massive drawdown from 4.17 billion Polygon coins down to 4.1 billion, down to 1.6 billion. So that's like a 3 billion coin reduction in like a month. And now it's started to pick back up. And I would imagine it's picking back up is because we're seeing the prices from November in Polygon draw down significantly. So again, look, people started to sell because they pulled their coins out of DeFi and started to sell. The price went down, and now they're starting to reaccumulate and put it back into DeFi. I mean, you could see that basically on this chart. And so giving the dollar amount in TVL, I don't think is a valid point, because Polygon has way more Pol tokens in DeFi today than they have at any other point in history. So yeah, I don't really think it's that big of a deal that Avagachi exited Polygon. I'm more interested that another ecosystem is moving to Base. And again, to me, Avagachi is not really making money. Like, who's really using this ecosystem? Maybe people are. I don't think people are. But if I'm wrong on that, let me know down below. Let's see if we can pull up the Avagachi ecosystem again. But yeah, if you guys know the answer to that, please let me know. Avagachi. Oh, well, looky here. So if you were to just go on that article, you'd say, oh my God, this is terrible for Polygon. Polygon is never going to survive. Guys, look at Avagachi. From 2021, they had $135 million locked. And basically now they have nothing. So they've had a 99% reduction in what they actually have on chain, and now they have nothing. I mean, for real. In my view, them moving to Base is an indicator. Number one, Polygon is a real network. Number two, I would imagine a lot of these ecosystems are not making any money. So they're moving to Base because basically they can run on Base for free. It probably costs money to run on Base, but it's probably cheaper than running on Polygon and developing for Polygon. And so you have a non-existent ecosystem, right? An NFT game that nobody's using, right? I mean, it's all gaming in crypto. We talked about Axie Infinity a few weeks ago. Like 8 people around the world are playing Axie Infinity on a regular basis or something like that. So they're probably moving to Base because it's just cheaper to have a non-existent platform that nobody uses on Base. And if I'm wrong on that, prove me wrong, because the data shows that there's nothing since 2021. So again, when you see these kind of articles or see these kind of stories, you have to really dig a little bit deeper to understand the real metrics and understand, is this actually bearish or bullish for Polygon? Because based on this article, I would be bearish Polygon and bullish Aavegotchi. It's really the opposite. Anyway, moving right along, Solana developers launch a new confidential balance token extensions to improve on-chain privacy. Solana infrastructure company Helios expanded what so-called confidential transactions can do in a bid to attract institutional activity. The new feature, collectively referred to as confidential balances, is the first ZK-powered encrypted token standard built for institutional compliance without sacrificing sub-second finality. Confidential Balances ropes together a series of 3 new token extensions on Solana to enable more activities while retaining user privacy. This includes introducing encrypted balances and transfers, the ability to mint and burn tokens while keeping the total supply discreet, and a private fee handling. In short, the new functionality allows users to convert public token balances into confidential state, privately transfer them to recipients, and revert these tokens to a public balance if needed. They said all these steps take advantage of the homomorphic encryption and zero knowledge proofs behind the scenes so that while sums are hidden, the system can still verify correctness. On X, the developers note that the system can be useful for financial use cases like encrypted payroll services, business to business transactions, and other privacy preserving applications. Very interesting stuff here, guys. Currently, confidential balances are implementation ready and Rust based backends. These will bridge the gap for user adoption until native wallet support matures. And this is true. This is something that people think about and talk about in Bitcoin and Ethereum all the time. That, you know, if you are paying somebody or you're a business, you don't want all your finances out there, right? To all of your customers and all of your clients and all of your vendors or people that you pay. Like, you don't want that. So having some type of confidentiality in these is important. You know, some people just use centralized exchanges for like payroll and stuff like that. That way, Coinbase is paying the person in crypto, so it's not coming directly from the company's wallet per se. And I would imagine we'll start to see more of this on other chains as well, whether there's smart contract platforms that allow transacting within them, or something like the Lightning Network, which is kind of a separate network built on top that allows other types of transactions to take place. Anyway, remember what I told you guys just the other day about Solana getting a new company that is going to basically follow the MicroStrategy plan by buying, instead of Bitcoin, Solana? Well, Janover's Solana treasury strategy could make Solexy the next 1000x crypto. Well, I don't know about that, but basically, we heard that Janover, which is a fintech firm, they made their name for themselves by connecting real estate borrowers with lenders, and they successfully raised $42 million through convertible bonds for their Solana treasury strategy. And so this is really the part. We're not talking about Solaxy. I don't even know what the hell that is. This was, I don't know, a paid article, I would imagine. But, I didn't know how much money they were actually going to be able to purchase in Solana. $42 million is still a very small amount. But remember, this is the only firm that's buying Solana right now. All the other firms are just buying Bitcoin and maybe Bitcoin and Ethereum that we know about, like MicroStrategy, like Marathon Digital. The Solana thing is a whole different ball game. Personally, I think it's very, very risky for Janover. And by the way, Janover is a publicly traded company. I think it's Janover. Yeah, this is it. Right now, it's worth about $40 million, but keep in mind the price has gone up from $4 to $40, from $4 to $40, just based on the announcement they were going to be buying Solana. You could see that increase right here. But the thing is, they're buying basically their market cap in Solana while the Solana price is coming down in a bull market. The same thing I say about MicroStrategy purchases and any company that's following MicroStrategy purchases is if they're buying this crypto with debt, This is an existential crisis for the crypto ecosystem. You guys have to understand. Maybe $42 million won't do that much, but if MicroStrategy is forced to liquidate, or even the fear that they will be forced to liquidate if we go below their buy price, this can cause a massive ripples in the Bitcoin price and therefore the rest of crypto. I believe it's going to happen at some point in this cycle. I believe we are going to see MicroStrategy. I don't know what the word is. I think MicroStrategy is going to have a struggle at some point during this cycle where even if they don't flinch, the market is going to fear that they will, meaning selling some of their crypto, selling a lot of their crypto. I don't know, but I think that just the fear alone can bring us much lower, and that would potentially cause MicroStrategy to be forced to sell some. So we'll have to kind of wait and see how this all plays out. But generally speaking, I'm very bullish on this market. I do think that there's a lot of market bull flags. Granted, there's some bearish flags as well. But I think generally speaking, the market seems to be kind of bottoming out, right? And people seem to be kind of like over this drop in all the prices, right? From Ethereum to Polygon to Solana. And so I think at some point we will see the markets turn around. For how long, that's a whole different story. I think that the markets, once they start turning around and starts to get traction, we're going to see a very rapid move to the upside. It's going to be overbought. It's going to be pico top of the market. And I think in this pump, that's the time to sell. We'll have to see if it actually happens or whether we're just entering a bear market. But I don't think that we're in a bear market just yet. I think that we will be in a bear market maybe by this time next year or sometime in 2026. But we'll have to wait and see. Always think ahead. Always have a plan in these markets. And let me know what you think down below. I'll see you guys when I see you. Invest responsibly and crypto on.